of January 2024, Tao Wang, the chief China economist and the head of Asia economics at UBS, stated that 2024 is believed to be a year of economic stabilization and consolidation of China, with an expected GDP growth of anything between 4.4 and 4.5%. Nothing less was expected of 2023. IMF, by the end of 2023, expected the GDP of China to grow by 5.4%. Ironical enough, against the dollar, the Chinese yuan plummeted to a 16-year low in the very same year, intensifying the air around. Welcome back to our channel, the Global Headlines Hub, where we will attempt to analyze all the variables that are fostering instability in the world's second largest economy. China's economic struggles are closely linked with its property market dynamics, and the property crisis plays a significant role in the downturn of the economic landscape in China at the moment. I hope you understand the depth of it when I say property accounts for 1/3 of China's economic production through construction, real estate development, and related industries. It is important to note that this growth is the result of intensive borrowing by both the developers and local governments. With the increase in migration from the countryside to the urban cities in China, the demand for housing increased, blowing up the real estate debt. Local governments sell land to property developers to earn revenue. Developers, in turn, relied heavily on the borrowing from the Chinese banks on cheap credit to fund these projects, leaving behind a never-ending pile of debt. These homes are then bought by the consumers post or pre-construction. As per the People's Bank in China, in 2020, property in China accounted for 59% of household wealth, but with a towering debt of $12.8 trillion. Eventually, in the same year, Chinese policymakers developed a three red line policy that would determine if or if not a property developer is capable enough of borrowing any more money from the banks. Surprisingly, a huge number of property developers couldn't qualify the threshold the three-line policy drew. Revenue from the land sale declined massively, with local government's debt on the rise. Even the banks stopped issuing mortgage loans. It was then that the crisis finally began to surface. Let me put you through an example now. A property giant like the Country Garden had unpaid bills of $200 billion and has been declared in default on its debt after failing to make a bond repayment on October 18, 2022. In 2021, another major property developer, Evergrande Group, missed two of its very important payments, further worsening the situation. A sense of panic swept across the nation, where everyone was anticipating the onset of an economic crisis. Just imagine what might be the condition of the Chinese market if Evergrande, with a borrowing or a debt of $300 billion, were to go bankrupt. Among all other repercussions, boycotting mortgage loans stands first. Citizens denied paying any more installments before the construction of their homes resumed. This widespread distrust and discontent reduced consumer demand, disrupting the spending pattern. After 2023, influenced by the situations in real estate, even the private businesses have stopped putting much investment in the market or the economy, and also have stopped hiring people in considerable amounts. People are not borrowing any more money, nor are they spending much. Everyone is hoarding the money and stopping its flow, which further worsens the situation. This was definitely not the only force at play. The pandemic of COVID-19 disrupted global supply chains and led to a contraction in economic activities worldwide in the early 2020s. China, as the initial epicenter of the outbreak, brought about a lasting impact on its trade, tourism, and overall economic performance. As we say, problems always come in threes. 21% of China's urban youth is unemployed as of May 2023. In situations as such, do you think a dream of owning an apartment could be considered realistic? That too at times when even earning a meal for the day seems like a challenge. China now is mirrored by serious demographic challenges. challenges. The one-child policy, in effect from 1979 to 2015, resulted in an unbalanced age structure with a declining labor force and an aging population. Economic difficulties brought forth by this demographic shift includes rising healthcare and pension expenses, a possible labor shortage, and a smaller pool of potential customers. Predominantly being an export-oriented economy, China now is in a tight spot due to the trade tensions with the USA and other trading partners. The Trump administration started the trade war between China and the USA, which resulted in tariffs on commodities worth billions of dollars, causing supply chain disruptions across the globe. These disputes brought special attention to the country's weaknesses stemming from its reliance on foreign trade. Tell us in the comment section below what measures could be adopted by China's government to uplift the already drowning economy.